Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll get through our market update, update the earnings trades that are out there, and then Joe will have his analysis at the end. So let's get started. Okay, major indices all still in one. Russell's still hanging in one. Um, pie wise, obviously, we've dropped below 45 on state one, so we're no longer overbought. And kind of teetering right near that 50-50 line for the pie there. So definitely getting quite a few transitions to two. And I think that's it. Let's look at the pulse chart here. So, whoops, kind of flatlined, just meandering down for the ones here. Eight's not big change over the last like month honestly. But we do the twos have picked up some. You can see here, since the beginning of the year, getting a little bit of a pickup in those twos. So, it's this downward movement. Obviously we had a pretty rough day yesterday, especially for like Russell. If it's going to continue, then we'd see more going to two, and then we'd see these fours starting to pick up. Those haven't done anything really, so just kind of keep your eye on that to see if there's going to be any like big sustained downward movement. But on the flip side, we start getting sevens, things going in back into one and eights going into seven. That could be your indicators there. So, but that's kind of, just kind of look at those four and the seven, see if how things are going. Obviously, two also, but that's kind of where that is. Still bullish overall on the highs, lows. You can see you're getting spikes here. Obviously, that huge down day, we still didn't even really make a dent on new lows. So, this is very bullish, getting all the highs and pretty flatlined for the lows. So you can see in general, uh, pretty clear indicator when this thing starts flipping red, it gets ugly. I mean, it's a very good chart. You know, Obviously, things get ugly here, they start turning around, still get some blips, and then, all clear, basically like here, have a nice run up. And, it's pretty good chart I'd keep my eye on. So right now we're still looking bullish. Um, Definitely a bullish pattern here. So, okay. Uh, Nothing much down here. All right, this bullish bearish. So, all the way up at the 84 for the green up here, came down, pretty much put on the brakes right around 60, had another, pretty much put the brakes right around the 50 area. So, if it crosses, then, typically, occasionally you'll get one of these where it's just like a little blip and then like come back. But most of the time there's some momentum, that'll carry you through for, a short term, like type pullback. So, that's another thing I, kind of keep my eye on. It's holding that 50. So, all right, let's go into SPX. So, it's been a stellar state one from the get-go, just ran all the way up, turned that target 3 into support. So that's obviously important support. The range is 46 to 5. So, last week I was talking about, expecting resistance right up here at that 5K. We definitely, got over that a day or two and then, turned around. So I'd still continue to expect that to be pretty tough resistance. Um, but obviously been in here a long time, like not the max. Yeah, I haven't hit the max. That would be like almost double from where we are currently, but it'd be like a double state one. So, but definitely a good run so far, and I don't know when it's going to come out. One, let's look at the chart here. So you can see, I'll draw the lines. We tried 5,000, which is nice. Yeah, I'll get up there. That's your five. That's top of the range. 46. It's like right in here. Sorry. So we had one, 2 days, and then pretty big drop. I wouldn't be surprised to try and make another run, but this is going to be, you know, as I said last week, I'd expect pretty strong resistance up in this area. The longer we're hanging around there, the more bullish I would be. If we keep hanging right around here, then obviously we're going to break through it. But if we get a good pull, but one day is not a pullback, So, but a lot of these markets have been like that. It's like here one day and then just kind of, so that's not a pullback, but is a good breather at least for the market. Did it here and then turned around, kept running, but I think the key, at least upside for the market's going to be watching this level right here, 5,000. So that's where I'm at on that. Clear that. Okay. So Russell, pretty much average right around the average time. Definitely not the average move. Wow, look at that max move, 50. That's a massive. So we talked last week, tool here. So expect it to run up into resistance at this entry price. You can see, here, and then it just had problems, the whole time. Tried here. We actually got above, and then of course the next day we had inflation. Now we're back down in the gutter. 19 to 21. So kind of mid-range right now for that. But I don't know how long this will be in state one for, how much longer, but it's pretty much range bound, between this 2119, not really making a good run at 2100 yet. But this is has been very correlated with the rates. So those rates popped up real strong after the inflation ratings. So we're at 425. I'll just pull this up real quick. So, we went from 5 to like 3.8, and now we're back, got up to 4.3 yesterday. So, this goes up, I'd expect Russell that, once we start getting up, 4.5 and stuff, that's I think overall a pretty strong headwind for the markets if this starts going even higher. But in here, I still think we're okay. Obviously, lower is better for the markets, but if we get up here, could be real problems for markets and the banks. Obviously the small ones, but we talked about that over and over. So, so that's it for that Russell there. So, got all the lines here. So there's bottom, tops up here. This right in here, the 50 days kind of acting like support here. It's obviously bounced off there, but it's a kind of lower level you can look at least right now. It's acting, if it starts acting like support, then, I'd be watching that. So, one, two, three, at least three pretty strong tests. So, I'd be watching that. And then, obviously upside's 21, we're ways off that, but, we did make new highs, from those previous three tops, which was very bullish. Just going back here. So, it's August of 22. That we've been pretty much in this channel. So, didn't make new highs here, but I think, kind of the key thing for Russell, SPX, we got to the upside, we got a good target down. You can check this 50-day, but what's more important, we did test 19 and bounced off that. So, just staying above 19, I think is very bullish for the markets. If Russell could stay there, then, and we're quite a bit off of that. Yeah, we're like right in the middle, 2000. We dropped pretty good yesterday. But, I think the low was 1948. So we're getting kind of close. But so you got this downside 50 and then below that 19. And obviously upside's 21. So that's it for the key indices. Huge changes here. As you would expect. I mean, huge changes. So no cut in March. Now, we went from seven, almost certain cut to nothing. That was a month ago. So now we're at no cut there. And then May this is no cut here, so even more. And a month ago they had two cuts by then, so that's shifted like almost two there. Long term is pretty crazy. So you look at the median, that was 350. We've moved up, one, two, three more. So right now this is kind of in the middle. That's 1% cut this year. So huge changes. You can see a month ago, this was probability of like 1%. Now it's right in the smack in the middle. So they did put out some 2025 stuff. I haven't gone through that yet, but yeah, so that's cool. So that's it there. Balance sheet, nothing going on. They're kind of flatlining. Still kind of, just my general thesis at 7,500. It's all going to be, I would expect, March time frame. We got a lot of stuff going on in March. So that's, yeah, obviously, with like PPI, producers price index. So that's negative. I was just looking at some of the European stuff too. I mean, PPI. So all the costs are, for producers have gone down. I'm just waiting for them to pass that along to us. But that number yesterday, it wasn't like huge. Where it was yesterday, but definitely, like you'd see, like kind of expectations, and the core, which is, I guess, the favorite one for the Fed, came in hotter. So that's what all that reaction was for the market. So okay, that's it. For the market, any questions, comments? Nobody? I think the earnings have been, pretty solid for the most part. That's going to be the main driver, that and the Fed. So the Fed, I think that's gonna, next month, it's gonna kind of where things start getting a little dicey. But anyone
Do you see the 10-year rising above the 2 anytime soon?
above the two?
the year.
The 2 year, I don't know. I would expect that. I think, kind of, it's going to get dicey next month. You know, seeing how things fall out, but there's the two. Let's look at it. I like this chart better. Look, we're back to, yeah, 10s 4 3. Wow, that's dropped. Um, I could see that. Yeah, it's really depend on like how, like what these inflation numbers come, and then the auctions, they're putting out almost double the amount of debt from last year. So so far they've had good auctions, good demand and stuff like that. So but it's definitely not out of the realm of possibility.
Yeah,
So
that curve cannot stay inverted forever.
mm-mm.
And I don't see the 2 year coming down because I think rate cuts are off the table. 2 year is highly correlated to the Fed funds rate.
Yeah, I saw some like article, like some headline. It's like, oh, are rate hikes still on the table? I was like, oh, come on. Like yeah, I don't know about that. But I mean, they'd have to really reverse. But it's definitely come down. I think, just, the M2 coming down, I think that's the biggest antidote. Obviously, raising the rates some, to keep like the real estate debt madness, um, you know, keeping that under wraps somewhat. I think that was necessary, but I don't think they need to go this high. Um, so yeah, it's starting to take shape like a normal, like the actual 30 years higher than the 10, like, a decent. So yeah, that like 30, like how I mean 30 years and you're getting nothing different than 10, 30 years a long time. So uh, I guess it's corporate and government's buying that stuff. Anyway, all right, thanks, Adir. Anyone else? Questions, comments? I'll go through the earnings stuff here. All right, let's look at. Yeah, we're making a lot of like changes to the different screens. We should probably have like an under construction little yellow sign up here until it's done. Uh, so non-mover. So that one, yeah, we kind of pointed out last week that thing closed out nicely. I'll just pull it up. So we had that one loss, Delta. I think that's at the beginning of yeah, this one, NXPI, that was like a day, but GLW, just kind of show you what happens here, like why we do the 2 weeks. So this one popped out, and then came back into the range here. So profit wise, we're down pretty good first day, and this crawled back and was able to close it out. So these are, profit, up like 1,000, even with this, terrible, bad trade there. But those happen. Let's see what else. We closed out the vol rise. Yeah, the Disney didn't hit the target, but pretty close. That's pretty good for the vol rise trades. So uh, usually it's like 10 or 15 uh, bearish runners. So got three of these open right now, all like marginally down. Got one that's closed out, a match. So that hit the profit target. So three open here, fairly new trades. So got some time. Bullish runners. Got three there also. Now this STX has been, it's pretty close to where, but it's still down some. PSX is, these are marginal, so nothing big there. These two other ones had closed out before at the profit target, so it's all up there. All right, bearish pre-runners, don't see many of these. That's Roku. That one had a big down day yesterday. I've been kind of watching that one. I guess it was someone else who's getting bought out. So he said Vizio got bought out. But I had a pretty ugly day. So it's working so far. I would expect, being down $5 at this would be a higher percentage at this point. But that's kind of all you could want. It's like, oh, we should have hit 25% by now, but not
Roku
yet.
hit yesterday.
Yeah, probably intraday. I don't,
Intraday it hit.
yeah. I'm sure it did. It was down like 10% at one point. So
Yeah, it hit the profit target for me yesterday.
yeah. Well, end of day, I'm still holding on to it. Once we get the 20-minute data, right, all my problems are solved. And then Cheesecake Factory. We got till the 20, get another week for this, both pre-runners, but overall, these, only had one loser so far, and quite a few profit targets hit. These were right there. These are about halfway there, so only one loss so far. So overall, it's been a pretty good earnings season. Hopefully these runners, start closing out and just continue trades. We're about a month out from next earnings release, so but so far so good. And the last two Q1s have been bad, so just keep that in the back of your head. Like the last two Q1 earnings plans have not done that well. So I think I have that. I'll just pull it up real quick. Let's see, Q1. Yeah, so this one we actually lost money. Bullish pre-runners did bad. Let me see before that. Yeah, lost money that one too. So hopefully our luck changes with Q1 2024. So all right, any questions, comments on earnings, trades, or anything like that? Anything? You guys liking the new website here?
Yeah, I am. Yeah, it's good.
Yeah.
I'm getting
Okay.
used to
Yeah.
it.
Thank you. It's all Joe. Joe's the designer. Yeah.
Oh, I did have one question
Team effort.
Yeah.
on the, where you show the state modeling of an individual stock or ETF on that page. Is there any possibility of like putting up some sort of warning when it's about to switch states? You know what I'm saying?
But what?
Well, like you have, for example, SPX1, and below, when the page comes up, it'll say next possible states.
Yeah.
But there's really no condition on what would cause that to happen. Like I realize state modeling is more complicated than hitting a price level. But
Yeah.
if you're getting close, is there something? What would be interesting is for the investor would be, hey, this is getting ready to trigger state 2.
Yeah.
Hey, Sadir,
Yeah.
go ahead, Josh. I mean,
No,
it's
this
beautiful.
Joe's been bringing this up quite a bit. So go ahead, Joe. I'll let you go.
No, I mean, Sadir, you know, we're thinking the same way. I mean, it really just comes down to having extended conversations with a shook and understanding this secret sauce. And I think, you know, possibly in time we'll be able to offer something like that rather than just, you know, the expected next target. And you know, what's got me really cooking on this is, you know, we talk about these extended state ones and, you know, state eights, you know, in a down market. But like after last night's move, I you know, I was dying to talk to a shook, just to say, Shook, are we close? Is it going to roll into it too?
Yeah, that's what I want.
And,
Yeah, for instance, the Russell dropped most, I think, yesterday.
Yeah.
And
Yes, by
so
far.
it would be
By far.
nice. Is it close to going to state two? Or is it still pretty solidly in state one? Like I said, I know state modeling is more complicated than just some price level, but some kind of warning there would be interesting to an individual investor like me.
Well, we assure you, we're thinking on the same lines, and any insights we get, we'll certainly pass on to the group. And, you know, if there's something that we can add to the platform, we certainly will. But no, unfortunately, no answer for that just yet.
Okay. Well, at least we're thinking along the same lines. Thank you.
Yeah.
Yeah, certainly.
All right. Okay. Well, I'll let you take it over here, Joe.
Okay, Josh. Everybody, let me grab that screen. All right, just a couple charts today. Let's see. Always like to jump in the morning just to see, you know, any transitions. You know, we got one of the sector overviews rolled into it too yesterday. You know, not, I don't think, real meaningful in this big scheme of things, but I always do enjoy seeing, you know, when we get transitions. A few charts I want to run by. I mean, you know, you get a day like yesterday. I think we all realize the run we've had since October, early November. Corrections are not a bad thing. So I just, you know, pulled up the retracements, couple simple numbers. You know, we talked about this a couple weeks ago. You know, if you're in the camp that the market really needs to pull back, you know, a decent amount here, we got to go back to the October lows. I mean, I think the last retracements I pulled up a couple weeks ago were, you know, from the interim December lows. So, you know, you go back to October, and basically a 3/8 retracement is going to be this level in here at 4,700 in the S&P. So, you know, that's a long ways from here. But if you're in that camp where, you know, we're going to get an extended correction, I think that would be the target, 4,700. NDX, same thing, going back to the lows. You know, you don't have, you kind of some choppiness here where SPX, you know, you had a half, you know, 4,700, pretty good level here 3 times in terms of prior lows. NDX, you don't have that. Basically, the 3/8 retracement in NDX would be about 1,100 points lower from where we are now, basically 16,500 in that neck of the woods. So 4,700, 16,500, you know, are the numbers I think if you're really thinking we're going to get a half decent pullback. Let's see. Something that certainly the market is talking about and anticipating is, sorry, I got to find it here. There we are, NVIDIA. Okay, so NVIDIA's earnings are after the market close next Wednesday. Wouldn't surprise me if the market kind of meanders for a week waiting for this number. You know, from an economic standpoint, we got all kinds of numbers tomorrow and Friday. Monday, Tuesday, Wednesday are, you know, kind of quiet, but lots of stuff, you know, over the next couple days. I don't think any of them are necessarily inflation related, more in terms of the overall strength of the economy. So I just wouldn't be surprised if, you know, we kind of roll around for a week waiting for NVIDIA. And let me pull this down a little bit. We all know how high this thing's gone.
Joe, excuse me.
Yeah,
I think that NVIDIA earnings could have as big an impact as CPI yesterday. You know, NVIDIA, if you look at the market, there's a lot of stocks that are down for the year in the S&P 500. And it's really these magnificent six. Tesla's not even involved anymore. And of those, NVIDIA is the biggest one. And if they don't blow out earnings and have a great, if they just meet or slightly beat expectations, I think there'll be a sell-off. Their stock
I would
is
agree.
Go ahead.
I would agree 100%.
I think their stock is so highly valued. They've got to blow out earnings and have a fantastic forecast. And I just don't think they can just keep doing it. You know, eventually you just can't go up at this astronomical rate.
Agree 100%. I think it will be a catalyst for the market, as you say, you know, and just in terms of past numbers, last quarter they were expecting $3.03. They got $4.02. I didn't check the revenues. This quarter they're looking for $4.51 is what they're looking for. That's a 400% earnings increase year over year. Okay, so they're just very high level numbers, but I think this would be one to watch for sure for maybe the next big move in the market. And it's just kind of hard to imagine what they could say to have the market explode to the upside. But let me, I was going to show a couple other charts, but any guesses on what this chart represents here from anybody? There are two different indexes here.
One's got to be the S&P.
I'll give you a hint as I scroll down and you see,
Is this the
the
.com
timeline. Okay, here we are. You know, basically 95 to 2003. Blue is S&P. The multicolored is NASDAQ. Okay, so I'm going to pull this chart up from time to time. Excuse me. I mean, the magnitude of that explosion to the upside, you know, and basically, you know, we're clearly different now. What I was doing is pulling up SPX and NDX longer term charts. Here, weeklies, okay, weeklies, just to give us a perspective. Excuse me. NDX, you know, over the last 10 years, okay, you know, we all see where the COVID low was there. Here's 5 years, a little more recent. Same thing with the S&P. S&P over the last 10 years. And S&P over the last 5. And, you know, the time frame of our moves, you know, has been not as abrupt as the tech bubble. I mean, I just find this to be just a breathtaking story, you know, the way, and we all lived it, you know, that NASDAQ bubble. I think basically, I look at this leg here. The reason I went with the 10-year charts, you know, in S&P and NASDAQ is just to get a chance, you know, take a look at, you know, obviously the trend was up, kind of slow and steady. It was, you know, here, which was, I think, October of 98, when, you know, you started to get a parabolic, you know, explosion. That was 6 months. That was from October of 98 till February. This whole move in here, I just call basically a rolling correction, even though obviously it was higher lows. And then, you know, this last leg was October of 90. No, I'm sorry. It was October of 99 right here to March of 2000. It was 5-6 months. All right. So you basically, you darn near doubled in that period of time. And I'm not suggesting that's where we're going anytime soon with NASDAQ, but I just think, I'm still of the belief surprises are to the upside. And, I just want to offer this as a crazy perspective to what's happened in the past, from a pricing standpoint. It was also interesting to me that, the NASDAQ had rolled over big time and the S&P was still fighting those highs, a couple months later. So anyway, just wanted to offer that perspective. I think after the close next Wednesday, we may get a sense if anything parabolic. I mean, it seems like it's been parabolic in a couple of the indexes and certainly some of these stocks since October. I think we'll get a sense after the close next Wednesday whether that might continue. So, just any comments or question open to them. Again, S&P 4,700 on a real pullback. NASDAQ 100, another 1,000 points lower at 16.5. Anybody?
Yeah, but this is Dave, and I agree with both you and Sudhir on the NVIDIA numbers next week. But don't be surprised if they throw out a blowout number. I expect a blowout number anyway, as far as revenues go. Now, what will be interesting, I think the most interesting on that call will be the guidance and how the guidance is received. Because they'll be guiding good, but they got to almost be guiding perfect and great again to go up. But I expect, kind of like Apple usually does, and Amazon, they usually have revenue numbers and that meet or exceed pretty substantially. I think NVIDIA's sold everything they can produce the last 2 or 3 quarters. I mean, they haven't not sold anything. They've sold everything they've made. They've only been held back by how much they could produce.
Yeah.
But you can't stay in this forever. And if it does pull back, I think the catalyst for a index pullback on NASDAQ and the S&P are quite likely, just like you said. I think our sentiment has played out pretty much as we've been discussing for the last month, 2 months. So that's why I haven't said much. It's like, well, yeah, we've been saying the markets have been acting out as we pretty much predicted. So there we go.
Yeah, it'll going to be interesting to see, what how the market responds to, as you say, Dave, probably blow out earnings above this 451 number. All right, Josh. Well,
Okay. Yeah, thanks, Joe. Thanks, Dave, Sudhir. Anyone else? Questions, comments before we wrap it up? All right. Well, thank you all. We'll do it again next week.
good week, everybody.